This call is now being recorded.
Right. A very good evening to all students. So I will begin a session in 5 minutes.
Okay, sharp, sharp.
Yeah, let's begin the session today. In the last session, I taught you what is salary, what is the exact meaning as per the Income Tax Act, what is house rent allowances, what are the categories of the allowances which are exempted, fully exempted, or not exempted, or partially exempted. Then we come forward the house rent allowances. What are the rules of the house rent allowances? Then we come up with the perquisites, gratuity. Even we talk about the retirement benefits like pension fund. In today's session, we are going to learn the different types of deductions. We are also going to learn what are the types of the provident funds and their rules, which is very easy. There's no difficulty at all to remember, to calculate the exact amount of the taxable salary or the income from salary, right? Today, we also do the multiple types of the questions along with the calculations, that how the amount has been calculated using the various rules which has been taught earlier, and which will going to you will learn in today's session, right? And at the last we will going to exact format, learn to format it, how to calculate the salary with irrespectively calculations of different allowances, as well as the deductions, any professional taxes. And at the end we will get to know that we have estimated the income, taxable income from salary. So now in today's session, let's begin one by one. That is deductions from salary income. So these are the three parts of the deductions, right? Here under deductions, we talk about deduction under section 16. That is subsection or subclause A or C. So when we talk about section 16, Subsection should be in number. So when it comes after subsection, if any alphabet is come, it's called clause. That is A, B, C, D, Z, etc. So now these are the three categories of the deductions that it has been deducted from your gross salary. First is professional or employment tax, which has been imposed by the state government. So, if the state government, like we talk about the Delhi government, we talk about the Bombay government, we talk about the any of the Gurugram, you can say Haryana government. So there is a irrespective different taxes like professional tax or employment tax. So if any of the state government charges 15% professional tax, so the 15% professional tax is to be deducted from the salary, right? Next is standard deduction. Standard deduction under section 60, right? There is a limit that is 50,000. Whatever your gross salary is, whatever your annual salary is, deduction, standard deduction is fixed. There is a limit that is only 50,000. So whatever your gross income is, whatever your annual income is, standard deduction would be fixed and it will be charged only 50,000. So it will be deducted from your gross salary. Gross salary, how to be calculated? When you have a basic salary, when you add up your house rent allowances, different allowances, when you add up a contribution, any type of commission, any kind of pension, right? Any kind of leave salary, encashment, any kind of perquisites, any kind of provident funds, anything. When you add up all these things, all these items, you will get gross in salary. So once you get the gross salary, you have to deduct these taxes, these deductions. First is professional tax. If professional tax is mentioned in the question, you have to deduct from your gross salary. So second is standard deduction. So from your gross salary, there is an annual deduction is to be done. That is standard deductions, which up to 50,000 rupees. Next is the entertainment allowances. So entertainment allowances, it categories into two parts. The first one is 50% of salary, sorry, 20% of salary or 5,000, whichever is less. Like if you have an entertainment allowances tax to be imposed by the government, so there is a rule that we have to follow up. So the rule says is either 5,000 rupees or 20% of salary, whichever is less. So suppose if one of the person or individual salary is gross income, whatever the amount has been calculated, and we have to deduct entertainment allowance. So what is the rule of the entertainment allowance? There is only one rule: 5,000 or 20% of salary, whichever is less, that would be deducted from that amount, would be deducted from your gross salary. So these are the three categories of the taxes which have to be deducted from your gross salary, right? So these notes will also being provided uh, through the email. So once the session would gets over. Purposes, I already taught you in the earlier sessions what are the exemptions to be there. Allowances, I already taught you house rent allowance and what is the exact rule of the allowances, which is already is same, which has been taught in the last session and is almost same in this particular slides. Is already told you that what is a fully taxable allowances, what is a partially taxable, and what is a fully exempted allowances. So whatever the allowances mentioned in the question, you must aware that whether this category of the allowances are fully taxable or partially taxable or fully exempted. If it is exempted, there is no deductions to be considered. If it is partially taxable, it's one of the percent, like 20%, 30% of the salary will be deductible. And if it is fully taxable, so whatever the amount has been mentioned in the quotient, that whole amount would be taxable, right? Now, this is a procedure that how to calculate. This is an exact format. The calculation of gross total income or total income. So these are the particulars. As I already told you, that you need to find out first the basic salary, the basic pay that you get from your organization or from an employer. The next is DNS allowances. So whatever the DNS allowances, that is also the services or the benefits that the employee gets from the employer, whether it would be through cash, it would be kind, or any type of the services rendered to its employees by the employer. Next one is other allowances, which I already taught you before. The different medical allowances, hospital allowances, entertainment allowances, transportation allowances, tribal area allowances. So these are the categories of the allowances. Children's education allowances. So these are the categories of the allowances and with their respective rules, which is a maximum limit for two children only in all the allowances. So you cannot exceed the number of the total number of children. So if it is given in the quotient that entertainment allowances is to be chargeable for three children at rupees 800 per month. So you cannot consider the three as per the rule three childrens. You have to consider as per the rule two children. The exact amount, that is 800 into 2 into 12, that is for 12 months, right? So this is a way which is calculated and taught you how to calculate in the earlier session, the last session. So once you add all these three: basic salary, dearness allowance, and other allowances, by following up the rules and the deductions, you will get the gross salary. So when you add all these three things, items, you will get the gross salary. So once you get the gross salary, I already taught you the standard deductions. That is three type of deduction. The first one is professional tax. Second one is standard deduction up to the 50,000 rupees. And the third one is entertainment allowances tax, where the rule is says is 5,000 or 20% of salary, whichever is less. Right? So once you deduct standard deductions, you will get the total income. So once you get the total income, there is other deductions, like for example TDS, T, uh, tax deducted at source. You can say the surcharge taxes, other state taxes, the value added taxes. We can say the you can say central gross sales tax, state tax. We can also talk about. So whatever the taxes, other deductions, whatever the other taxes is to be charged, it comes under other deductions, and you have to deduct from your total income. So once you deduct the other deductions, that is from the total income, so that whatever the income that has been calculated, that income is called the income chargeable to tax. That means that whatever the income that you have earned, it is come from the taxes. So whatever the taxes to be charged, like surcharge tax, education says, so whatever the education occurred when you got an education, and when every state has charged the education says, that is only 4%. So surcharge, if applicable in your state or in your country, that accordingly the rate has been mentioned in the particular question. Now we talk about the popular deductions, which I'm already talking about. The standard deductions is only three, and the other deductions. So these are the other deductions. That is section 80C, right? That is like life insurance corporation, public provident fund. So these are employee stock options, right? It's a national stock. You can say currencies, that is home loan principal, that is school fees, anything excise duty. The particular limit of these expenses, that is the deductions under 80C, if any of the word has been given in the question, there is an amount limit, that is 1,50,000 will be deducted from the total income, right? So there is a chart is already given to you. The total income has been calculated while deducting the standard deviation from the gross salary. So once you get the total income, there is other deductions. So these are the other deductions. So any of the deductions is given in the question, right? So that comes under other deduction, and there is a limit of amount. So that amount is deducted from your total income, right? So 80C is like that. When we talk about 80CCD, the subclause 1B, that is NPS, that is National Policy, you can say, scheme. So we talk about here is there is a limit that is 50,000. There is another deduction that is 80DD, right? So the expenses is related to disabled dependent, that is either 40% or 80% disability, that is the physical disabilities people or the persons. So there is a limit. So if we talk about 40% disability, 75,000 would be a limit. If we talk about the 80% disability, so there is a limit, that is 1,21,025,000 rupees would be chargeable. The next one is 80 double TA, that is the any interest that you get from savings account only, that is available to personal of personal persons, that is other than the senior citizen or very senior citizens. So here we are talking about the individual accounts where they will get the interest on their savings accounts, and that is called the 10,000 rupees, right? So whatever the deductions has been given in your question, you should know the exact limit amount that to be charged and that to be deducted from your total income, whatever the total income has been estimated, right? The next one is 80, you can say 80G. So whatever the donations has been earned or received, whatever the contribution has been made to remain relief funds, or whatever the reserve funds has been uh, done by the companies or other than the organizations, right? And the contribution is made some relief funds or any charitable institutions that they have get any charity or donation which has been paid by the check or the bank mode. So it is written that 50% or donation or 10% of total income, whichever is higher. So there is a rule here. So when we talk about section 80G, so it is mentioned in the question section 80G and the exact name of the items. So if the name of the item is matched with the deduction under section 80G, so there is a rule you have to follow, that is 50% of donation that has been earned, or 10% of total income, whichever is higher, that particular amount will be deducted from the total income, right? The next one is 80GG. So any deductions has been any particular amount has been deducted, you can say for the rent paid, which is available to all the individuals except those who get the house rent allowances from employment. So it is exempted from those people who get the house rent allowances from their employment, and the rules are remains the same, right? So it's written the rent paid minus 10% of adjusted total income, 5,000 per month, and 25% of the adjusted total income. So this is a rule that the eligibility of the least amount. So whatever the whichever the amount is less, that amount it will be considered to deduct from the total income, right? 80D, so that is it's a health insurance policies contribution for self, for your spouse, or any dependent children's, if it is only paid by check or bank mode. If it is paid in the cash, it will not considered under deduction 80, under deduction 80D. So it should be only bank mode or in through check. So the amount would be, that is for 25,000 for individual, and for spouse and dependent children's would be 50,000 rupees. There will be no senior citizen category will be considered, right? The next one is 80G. So 80G, whatever the interest on loan taken for higher education of spouse, their children, or any student whom an individual to a legal guardian, so there will be no amount would be taxable. No amount would be deductible. Right? It is free. Let's talk about the 80 double E. So any interest for home loan, any sale date value is 50 lakhs or less, any loan sanction for financial year 2016 to 17, any individual not own any house before, any loan which is less than 35 lakhs, any maximum you can say 50,000 over section 24, that is 2 lakh rupees. So any maximum amount from 50,000 to 2 lakh rupees. So whatever the situation comes or mentioned in the question as per the section 80 double E. So you should know that what are the terms included in different sections, right? There is the limit, that is 50,000 rupees. So when we talk about 80 double DB, there is a medical treatment of specified ailments for dependents. So any dependent that you have, and any person who are dependent on you and they have a critical ailments, so there is a amount, that is 40,000 for your dependent, whether it would be child or would be spouse, and 1 lakh rupees, 1 million for senior citizen people, right? Then we talk about the 80 double CD and the subsection, that is 1. So the employees contribution to national policy scheme. So whatever the employers who contribute to such scheme, that is a rule, that is 10% of salary or 20% of gross total income, whichever is least, whichever is less, and that amount will be considered under section 80 double CD subsection 1. So these are the various, you can say, categories of the deductions. Categories of the deductions that you should know while calculating the exact taxable income from your question. So there is a next, the last deduction is 80 double CD subsection 2. So the employer's contribution, whatever the contribution to the employer's NPS, its national policy scheme account, whatever the contribution made by the employer, so the maximum contribution of the employee's salary, that is 14% in case of central employ is allowed to any financial year. So it is a maximum contribution done by the government employee, that is 14%. So any of the condition comes in your question, and that means it is section under double C, section 80 double CD subsection 2. So whatever the employer's contribution to NPS, so the maximum contribution is the 14% in case of government, central government employees. So these are the various categories that you must aware, because these deductions will be used when you estimate the total income, and after calculated the total income you have to calculate the other deduction amount. So other deduction amounts will be estimated by follow up, and once you know the various types of deductions and according to the item, the name of the items and the particular limit amount, so that you can easily identify an exact amount will be deducted from your total income. As I already told you in the first section of the income tax, the income slab rates. So whatever the income slab rate, suppose if your income comes under up to 2,000 you can say 1,050,000, so there is no tax to be charged, right, for an individual person. So if your income comes 2 lakh 2,050,000 to 5 lakh, 5% tax, income tax would be chargeable. If your total income comes between 5 lakhs to 10 lakhs, 20% tax on your income would be deductible. If your income is above 10 millions, it means 30% of tax would be deducted from your total income. So if you are a senior citizen, or if you are a super senior citizen, so there is also an income tax, different income slab rates has been given. So if we talk about up to, if any senior citizen have an income up to 5 lakh, there is nil. If your income is 5 lakh, 3 lakh to 5 lakh, your 5% tax would be deducted. If your income is 5 lakh to 10 lakh, 20%, and it is above 10 lakh, that is 30%. So if any of the senior citizen, super senior super senior citizen who have an age above 80 years, so this there is a different slab rate. If their income is 5 to 10 lakhs millions, that is 20%, and above 10%, that is 30%. If it is below 5 million, it is no tax to be chargeable. Right? So, do you have any doubts or any questions to ask? Any questions?
No question, sir.
Okay. So, let's begin the practical questions now. So now we will here to learn provident funds, because this concept will also be used while calculating the total income, right? So first you have to calculate the gross salary, which is also the provident fund is also a part of the salary, and accordingly we will calculate the gross salary. Then after gross salary, standard deduction. So once you calculate the standard deduction, you will get the total income. So once you get the total income, and later on the next step is you have to deduct the other deductions if applicable, right? So once you get the deduction, you will get to know the income chargeable to tax, right? So your income would be estimated, which is ready, so that tax will be charged, right? So the taxes would be the surcharge, if applicable, education cess, right? And of course the income tax slab rates. So if your income come which is chargeable is like say 10 lakhs, right? So it would be 20% tax would be chargeable, and you have to pay that amount to the central government, that is under income tax department, right? So this is a exact calculations or the procedure to estimate the salary, that is income from salary. So now the tax implication of provident fund. First of all, you need to know the four categories of the provident fund. The first one is SPF, that's statutory provident fund. The next one is RPF, that is reserved provident fund. That is URPF, that is unreserved provident fund, and PPF is a public provident fund. So I repeat once again for you all. SPF is the statutory provident fund. RPF is a reserved provident fund. URPF is an unreserved provident fund, and PPF is a public provident fund. So there is a different categories which are based on the basis of which we accordingly estimate that whether it would be taxable, whether it would be non-taxable, or fully exempted. So if we talk about that any employer contribution to provident fund or in different four categories. So if any employer contribute to the statutory provident fund, it's fully exempted. There is no tax. If we talk about RPF, that is Reserve Provident Fund, it is exempted up to a 12% of salary. So it means you need to calculate the 12% of salary, and that amount will be considered as an exemption amount. That means it will be deducted, right? It will be deducted from your provident fund, that is employer contribution amount. And you need to calculate employer contribution amount will be given in the question. You need to calculate the reserve provident fund amount, that is 12% of salary, that is exemption amount. So once you calculate the 12% of salary, that amount will be deducted from your employer contribution amount on a yearly basis, and whatever the amount would be considered would be calculated at the end, it will be added from your in your basic salary, right? Next one is unreserved provident fund. It will be ignored. There will be no tax, or we ignore the tax amount, or we ignore any amount which has been given during the time period or during the financial years, right? PPF, that is a public provident fund. There is such employer contribution will not be applicable, will not be considered as SSC on contribution. Why it not be considered? Because employer contribution, it's not its own amount. It is a shared amount which is contributed to public provident fund, and that fund is automatically from the public only, and that's the reason it is not applicable to SSC own contribution. Next one is employee contribution. Employee contribution, when we talk about four categories of the provident fund: statutory, It comes fully qualifies for deduction. See, now the deductions names has been given, that is ATC. So whatever the, you can see the rule says, the particular limit says amount limit, that is 50,000 rupees is fully, you can say, considered. 50,000 will be considered to deduct from your total income. When we talk about employee contribution through in RPF, that is Reserve Provident Fund, 50,000 deductible, and URPF unreserved, 50% deductible, PPF 50% deductible. So whatever the other deductions, that is ATC, 50%, 50,000 amount is a limit which is being deducted from your total income, right? Interest on provident fund fully exempt. Under reserve provident fund, 9% per annum will be that amount, whatever the amount considered from your interest on previous PF amount. So whatever the amount, the provident fund, let's say 10 lakhs. So if we calculate the 9.5% on a yearly basis, whatever the amount, that amount is exempted. That will not be considered in terms of any deductions, right? That means that amount will be deducted, and whatever the balance amount, that will be deducted from your total income, right? For example, whatever the PF amount would be 10 lakhs, and you have calculated the interest on PF 9.5% per annum, whatever the amount would be. So whatever, when you deducted that amount from your provident fund, and whatever the amount has been estimated, that will be considered, or that will be added to your gross salary. Next one is URPF, that is Unreserved Provident Fund. Ignore. Its PPF is fully exempted from tax. So when we talk about repayment of any lump sum amount on retirement, fully exempted, RPF exempted, URPF, that is exempted from tax, but interest is taxable. So whatever the exact amount of the loan, that would be exempted from the tax, but interest is chargeable. That means interest is taxable. When we talk about PPF, is fully exempted from the tax. So it's like the main concern here is that you have to understand the conditions. You have to know about the sections, that is ATC, right? So when we memorize these provident funds, so it automatically the basis that employer, employ, interest, repayment of lump sum. So when we talk about employer, it's fully exempted. When we talk about employ, ATC deduction. When we talk about interest on PF, exempted, all exempted except reserved 9% per annum would be exempted amount. When we talk about repayment, it's fully exempted except URPF, only the interest is taxable. So this is a way that how you can say memorize the rules, or while so that you can apply such rules into your practical questions. I already taught you this. Let's come to the questions now, because most of the theory part I already finished. So let's apply the questions. This is already done. This is already done. Already done. This is already done. Now, this is a question, that is Shri Manoj received the following emoluments during the previous year 2019 to 20. Particulars is already given to you. Now here you will get to know the deductions. Deductions of entertainment allowances taxes in terms of three categories: one, two, three. Particulars: basic salary is already given 90,000. Commission, that is 60% of basic salary is already given to you, that is 54,000. Entertainment allowance is already given to you, 12,000. Dearness allowance, which is also a former part of the salary, that is 10,000. What you need to estimate is determine is deduction of entertainment allowance from salary. So you need to calculate first gross salary. So once you get the gross salary, then you will able to deduct the deductions if Manoj is a government employee, if Manoj is an employee of RBI since April 1953 and received the entertainment allowance since then. Third, you need to calculate the deduction amount if Manoj is an employee of Kevin Limited since 1952 and receiving entertainment allowance since 1952. So now we have to estimate the amount of the deductions and we have to calculate the gross salary, right? So this is a question given to you. Just have a look. Just have a look of a question first, and then we come up to a solution and how the amount has been estimated according to the question. So now we will do all the practical questions so that you can have a clear perspective about the different varieties of the questions which will be asked in your final examination. So once the session would gets over, I will share you the PDF files of all the PPTs of all the notes on WhatsApp group. Right, so let's come to the solution now. If I hope you have already gone through. So this is a solution given to you. Right, so now we talk about the question. The basic uh, the how the question begin is you need to calculate the basic salary from starting from the basic pay, that is basic salary. So basic salary is 90,000. Now you have to think that okay, we have calculated the in the question is already given the basic salary. So what are the components that we need to add or which is also part of the salary? So what are those components? You should know that and you can easily identify from the question. So the first one is basic salary. Commission, how it would be the part, because already mentioned 60% of basic salary. If it is not mentioned 60% of basic salary or it's mentioned only commission, so is that means it is also a part of the salary. Commission received is a part of the salary. Commission earned is the same thing, is also part of the salary, right? So it means that basic salary is already 90,000. Commission is a part of the salary, so it's 54,000. It's already mentioned commission 60% of the basic salary, that is 54,000. Then allowances. I already told you that how to calculate the gross salary. There are three portions that you need to follow up: basic salary, dearness allowance, whatever the allowance would be, right? And it always given in the question, dearness allowance. And the next one is other allowances, whether it would be entertainment, motor vehicle allowances, rent allowances, anything, children's education allowances, transport allowances. So in the question, it's written entertainment allowance, right? So entertainment allowance, that is, it comes under other allowances, that is 12,000, right? So here DNN allowance is already given and it's written, it's forming a part of salary, that is 10,000. So it's already given. So let's begin. Your entertainment allowance is 12,000 and your DNN's allowance which is forming a part of the salary, that is 10,000. So once you add up these four items or four values of items, you will get gross salary. That is 1,066,000, right? So according to the format, if I have taught you the format earlier slides, the once you get the gross salary, the next part that you have to do in the forming a quotient, that is deductions. There are standard deductions, right? The first one is standard deduction, which is 50. If you see, I have already told you standard deduction is categorized into three parts. The first one is professional tax, second one is standard deduction up to a limit 50,000, and the third one is entertainment allowance. What is the entertainment allowance? That is 25,000 rupees and 20% of basic salary, whichever is less, right? So, so the standard deviation under section 16, subsection clause, that is I, that is 50,000 limit. Entertainment allowance, we need to calculate entertainment allowances tax. Professional tax is zero, which is nil. Then how has been calculated entertainment tax? There is a limit 5,000 rupees. Now we have to calculate the 20% of the basic salary. So what is the basic salary is 90,000. 90,000 into 20%, we get it 18,000. So while we follow up the rules, an actual entertainment amount received is 12,000, right? So whichever is less is 5,000. So 5,000 is an exemption amount which is being considered as 5,000, and this amount will be deducted from your gross salary, which is I already told you, right? And I already told you it is a part of the deductions and standard deductions, which is categorized into three part of tax. That is standard deduction, there is a limit 50,000. Entertainment allowance, there is a rule. Professional tax, if it is any percentage is given in the question, there is no professional tax has been given, which has been mentioned. The professional taxes has been 10% charged by the government from the salary, so it's nothing has been given, so we have estimate, we are termed as nil. So 550,000 plus 5,000, it is 55,000 rupees. So it will be deducted from 1,066,000, and you will get the taxable income from salary, that is 1,011,000, right? So let's talk about the determine the deduction of EA from salary if Shri Manoj is a government employee. So when we talk about the government employees, you should know that it is fully exempted. There is no tax would be chargeable. There is no even a limit is considered for government employees, fully exempted. So that's why in the first two question, one and two, it's fully exempted. There is no tax if they are government employees, fully government employees. But in the third, it is a Kevin limit, it's a private. It other than the government employees, other than the employees. And that's the main reason we have estimated this amount. So the deductions amount is 55. It's asked that determine the deduction of entertainment allowance. So that is 5,000 rupees. So this is the answer of the or solution of the overall question. So you should mention in the question that in like this, that in the first two parts of the question, when while determining the deductions of entertainment allowance from salary, these are both are the government fully government employees, right? So as a result, the Mr. Manoj or Shri Manoj is fully exempted from tax. And as a result, there is no deduction amount would be chargeable. But in the third case, 5,000 amount would be deductible when we talk about the deductions under entertainment allowances tax. Right? It is already written working note entertainment allowance E. What is E here? Is it exempted? Government employee only. Right? So this is the exact way to estimate step by step you have to follow up. And every step has a marking scheme, right? And you should be, or you need to be efficient in your calculations. So there should be no mistake when you calculate the amounts of these specific terms or the items. Right? So if you have any doubt in this question, please let me know.
I'm clear, sir.
So that I can proceed. Yeah, actually, the net has been disconnected. All right, just let me share the slides. Just wait. All right. So now we are already have a word that interest on PF that is fully exempted in both the cases, that is SPF and URPF, that is unreserved provident fund and statutory provident fund, right? So let's proceed the commission. So the next part of the question is interest credited at the rate of 15% is already done. Commission received rupees 10,000 based on turnover, which is already commission received. Commission received on turnover, that is 10,000. The next question is fixed commission, that is 3,000 per month. So we have to estimate the annually. So how to estimate the annual fixed commission? That is 3,000 into 12 months. So that is 36,000. The next one is bonus. Bonus is 5,000. So we have to consider it accordingly. That is bonus is 5,000. So bonus cannot be annually. So whatever the amount of the bonus is mentioned in the question, you have to write up or considered as the same amount, that is 5,000. Next is last is children hostel expenditure allowance received for three of her children, that is 15,000. So as per the rule we can say here hostel expenditure allowance, which is already mentioned 15,000 for three children's, which is already at a 15,000. But as per the rule, we have to less exempted amount. And what would be the exempted amount? It's for two children only, right? That is, so there is an amount that is hostel expenditure allowance, that is 300 into 12 into two children. If we talk about hostel expenditure rule, if you remember, or that is 300 only, let's check once again for your, that is 300 for two children's. Right, so hostel expenditure allowance, that is 15,000, and less exempted amount would be for the hostel expenditure is 300 rupees, 300 into for two children into 12 months. So this is an amount of 7,200, and once we deduct from the actual amount received from the hostel expenditure allowance, we get 7,800. And once we add all of the values of all items, we will get the gross salary, that is 5,14,800. So, if you have any doubt when we talk about the calculations and the rules, please let me know once again. Right, so this is for the statutory provident fund and unreserved provident fund. Now, in the question, we have to calculate the recognized provident fund. That is, in other words, we call reserved provident fund. So there is answer of this question. This is a particular answer of this question. So when we talk about, let's say, basic same, DNN service benefit, DNN same, employer's contribution is almost same, exempted amount as per the rules. This is an amount. When we talk about interest of recognized or reserved provident fund, 15% is this amount. Exempted is 9.5% by 15% rate, right? So this is an exact formula. I will show you the rule of recognized or reversed provident fund. This is a rule recognized. When we talk about interest on PF, that is exempted up to 9.5% per annum. And when we talk about employee contribution, exempted up to 12% of salary. So these two rules are different when we compare to the SPF and URPF and PPF, right? Only these two different, rest is same for all of the categories, right? So 12% and 9.5% has been used as a rule in the question while estimating the estimating the amounts. Right, so let's come to the question. This is a question. Recognized provident fund, so that is reserved provident fund as well. This is the answer. See, when we talk about employer contribution, 48, and we also consider 12% of the basic salary, right? 3 lakh plus 24 plus 10,000 into 12%, which is all according to the rule. And when we talk about interest is 9.5. So 9.5 by 15, because 15 is the rate which has been charged in the question. So 30,000 into 9.5 by 15. So we get the 19,000 amount. Once we deduct from the 30,000, we'll get the 11,000. Commission on turnover is the same thing, 10. Fixed commission as per the question, same. Bonus 5,000. Hostel expenditure is almost same. If you see, it's same. Nothing is changed. 15,000, 72, 7,800. The difference is rule 12% here and 9.5. So these two difference amount will make the differences in the gross salary amount in when we compare the RPF to SPF and PPF, SPF and URPF. Right? Any doubts?
No
Just,
doubts, sir.
just wait for 1 minute, student. All right. So, So this is also another question that how will you treat income tax purposes if the contribution was SPF, RPF, URF? So this is a question given to you, right? And this is the answer that how you estimate. So please read the answers also, and of course the question. So retirement benefit you do of your own, right? So let's talk about retirement benefit. This is a questions it has been given to you, which has been discussed in the last session as well. What is exempt and how it has been estimated, and accordingly we have to follow up the rules, right? So this is the answers, and these are the questions ABC. These are the answers of ABC as well. This is also the C part of the question, and one by one, the particular calculation has been given to you so that you can easily understand what the question exactly saying, right? So this is also the gratuity. All the questions of the gratuities and multiple questions I have given for the practice. So do accordingly the practice for your final examination. Right. So these are the questions of gratuities, which is not so difficult, but you need to understand the different varieties of the questions according to their solutions. Retirement benefit, that is pension, which is already mentioned, uncommuted or commuted, which is uncommuted, which is monthly, commuted, which is lump sum, which is fully exempted for the government employees. And you can say when we talk about uncommuted, is fully exempted in both government and non-government. But commuted pension is government employees would be exempted. For the non-government, these are the two rules. One third of pension is exempted if the employee receives gratuity, and one half of pension is exempted if the employee does not receive gratuity. So these are the rules. Gross salary, calculate the gross salary of assessment year if he's a government. If it is a government, of course, is fully exempted in both the cases, commuted or non-commuted. He's a non-government employee, and he's a non-government employee entitled to gratuity. So this is a exact question. Vivek retired, and these pension has received at the time of the retirement. He got third, fourth of the pension commuted and received 4 lakh. He was in receipt of the basic salary, dinners allowance, entertainment allowance. So when we talk about the gross salary to estimate, you need to check basic salary, dinners allowance, entertainment is already given. So now the term causes, of course, pension is also part of the salary, so you need to estimate accordingly. So whatever the rule says. So these are the particular answers given to you according to the period, according to the number of months, right? Accordingly, this table has been mentioned what is exempted for the government, non-exempt is not government. So accordingly, the gross salary has been estimated. So if once you sit alone and look up the rules and of course the questions, and according to the rules you need to find out the answers. Right? If we talk about 31st October, so retired on 31st October. So when we talk about 31st October 2019, financial year begin in 2019 is April and retired in October. So the ending period is 31st October and the beginning period of Vivek is 1st April. So 1st April to October. So this is 7 months. So accordingly 7 months you have to estimate, right? So of course, monthly pension is already mentioned is a third fourth of the pension commuted. So what about the rest? If the third fourth is community pension is already commuted, so one fourth is left. So one fourth in the question, we need to find out only one fourth of the monthly pension. Or pension would be after retirement. So what was the retirement months? That is November, December, January, February, March. Because March is the ending period of the financial year, right? 1st April 2019 to March 2020, right? So 5 months. So the monthly pension is of 5 months, and third fourth is already commuted. So uncommuted would be one fourth. So accordingly, we have to calculate, right? So this way. So once you commuted pension, it's exempted for the government, non-government add up all, and gross salary would be like this, right? This is also another question. Answers already given. Please gone through accordingly. This is also a gratuity question, that is pension. So once he get gratuity, he does not get gratuity. He's a government employee. When we talk about government employee, fully exempted. You need to calculate only the non-government employees of the gratuities. So rules are already I already taught you. So accordingly, you apply the rules and find out the values. Answers is already in a detailed explanation of the answers is given in your slides. These are gratuity questions, multiple questions, pension questions already there, right? So you have to go through accordingly, because in these lectures it's very important to understand the most important topics that you need to learn, and accordingly you will practice, right? So these are the questions. There's already varieties of questions along with their answers. Their answers, please gone through every question. Now we talk about the medical reimbursement. So these are the various conditions has been given, so whether it would be reverse or not. So these are the you can say answers to be given to you. So treatment of family members of Miss Ramya, an employee in the hospital owned by the company, cost of the employer is rupees 50,000. So, what is calculate the taxable value of the perquisites in respect of medical facilities availed by Ms. Ramya, an employee of the Sham Limited for the year of assessment year 2020 to 21. So, these are the various four questions, and you have to tell whether it is exempted or not, right? So, as per we talk about an employee of in a hospital owned by the company, cost of the employer. So it's very simple. It would be taxable, it would be free taxable, it would be non-free taxable. So you will read accordingly, and please follow up the rules, perquisites, which I already taught you in the last session, right? Retirement benefit. Now this is also the one of the important part. Retirement benefits, here we talk about, because which this topic has not been taught in the earlier sessions. So now it's time to learn about this topic. That is retirement benefit, that is leave encashment. Leave encashment being categorized into two categories: government employees and the non-government employees. Government employee is a fully exempted, and the non-government employees, the exempted amount would be actual amount of leave encashment which is given in the question. 3 lakh is a limit, maximum limit of the leave encashment. 10 months average salary, that means whatever the salary into 10 divide by 2, cash equivalent of leave salary. So whatever the cash received in terms of leave salary, that to be considered in parts 4, and it would be credited at the rate of 1 month every year of completed services. So whatever the services in number of months has been completed, only the first month of every year it would be completed services. So any employees who are working and getting a salary on first month, that means first date of every month of completed services, that particular salary amount would be considered and accordingly will be calculated. So it depends on the question, and but the rules will be follow up the same. So this is a question has been given to you. Shri Naraisamu, retired from service after rendering a period of service of 32 years and 9 months. At the time of retirement, he received 2,50,000 as leave salary from his employer. The following information is provided. Salary at the time of retirement 10,000. Leave availed while in service 20 months. Average salary per month from January to November 2019 is 9,800. Leave entitlement is half months or 11 months by 2 for every completed year of service. Date of retirement, that is 31st October 2019. Calculate the amount of taxable leave, encashment, and gross salary if nurse is Narasim is a government employee or the non-government employee. So this is an answer provided to you. First read the question carefully by your own, then we will take up the solution. First read the question carefully. All right. So I believe you have gone through the question. So let's have an answer. So now particulars government employee and non-government employee salary. If you read the question, the salary would be April 2019 to December 2019. See, the date of retirement is 31st December 2019. So the financial year would be in 2019 beginning, that is 1st April 2019. So the 1st April 2019 to December 2019. So accordingly, we have how many months would be 8 months. April, May, June, July, August, September, October, November, and December. Why it has been shown 8 months rather than 9 months? Because the salary has been incurred on first day of every month. So that means it's considered 8 months rather than nine. Plus 10,000. So the salary at the time of the retirement is 10,000. So accordingly, we have estimated. So 8,800. That is the same for one. Leave encashment, government employee would be exemption, and non-government would be 1,51,800. So that is 2,50,000 minus 9,800, 98,200. How it has been estimated, please look up the answers or look up the working notes. Actual amount of leave encashment is 2,50,000. Permitted maximum amount exempted as per the question, as per the rule, that is 3 lakh. 10 months average salary, that is when we talk about 10 months average salary, 9,800 is a basic, into 9 months plus 10,000 is the salary of the rent. That is 98,200 leased. So then out of these two, it's a leased amount, right? So that's why 98,200 has been deducted from 2,50,000 of your leave encashment amount, which is actually received. So once we get that is non-employment is 1,01,51,800. So the cash equivalent to leave at credit at the rate of 1 month for every year of completed services, that is 32 months minus 20 months, which is already given in the question, which is equal to 12 into 9820 amount, which is a 10% of this amount, right? So 10% into 12 months, you will get the 17,840. So leave at the credit is 1 month of every month minus leave availed. So leave of the credit means 1 month every month, that is minus leave availed is 32 months. Are the 32 months is a leave at the credit which is being given, minus 20 months it is leave availed. That means the leave has been granted, right? So 12 months would be granted into 10% of the actual average salary amount. So that is 9,820. So which is amount is whatever the amount is 1,07,4840. 17840 is an exact amount. So something have a mistake in calculation. One digit has been missed. Let me check once again while calculating this amount. 12 into 9820. Yes, this is I already estimated. It's 1 1. There's one digit has been missed by me. That is 117840. While we estimating, that is 1 1. That is 11 1,17,840. Right? So 32 minus 20, the remaining value is 12 into 10% of the 10 months average salary, that is 9820. So the actual amount is 117840. Right? So it depends. You need to identify first the rules, that whatever you need to know the rules, exactly the conditions of all these four, and accordingly whatever the amount has been estimated, which considered from this amount only in the exact from the working notes. So when we calculate the leave encashment, you need to work on and to make up the working notes, prepare a working notes, and accordingly follow up the rules, which are these are the rules. Actual amount 3 lakh, 10 months average salary, cash equivalent of leave salary credit at the rate of 1 month every of completed years. Right? So this is a exact answer that you have to follow up, and accordingly you will estimate. So before you do any questions and come directly to the practical questions, you must follow up the rules first. So these are the rules, and these are the question. So it's written at time of 2,50,000 leave salary at the time of retirement, leave availed 20 months is already given to you, right? An average salary per month 9,800. Every amount has been already given to you. You just put these values into the rules and accordingly find out the final answer. Every amount is given in the question, but you need to find out, put these values into the question and do the format into the rules, and you will get the exact answer, right? So this is also another question of the leave encashment. So do it accordingly. Answer is already given to you. Put these values into the put these values of the questions, whatever, according to the rules. And once you follow up the rules, you will easily get the exact answer. Right? This is also another question of the leave encashment. Like every topic have 5 to 6 questions. So if I taught 1 or 2 questions in the sessions, the rest of the questions you have to do out of your own or at your home or your free leisure time. Right? So this is a question. Now we talk about the perquisites, which is already taught you in the last session. So this is a valuation of unfurnished accommodation. There are 2 categories of the employees: central government and other employees. Central government is a whatever the license fees is fixed by the government, that to be chargeable. But for the other employees who are living in cities, the population categories is give accordingly. You have to estimate the salary. So when we talk where the accommodation is owned by the employer, where the accommodation is a where is the employer accommodation, where the employer has owned the accommodation, and where the employer has not owned the accommodation. So there is a rules. So and depends upon the population of the city, right? These rules. So if the population is below, for the other employees, if the population is below 10 lakhs, 7.5% of salary would be counted if the employer has its own accommodation. If the employer has not its own accommodation, that means actual rent paid by the employer or 15% of salary. Same if the population exceeds from 10 to 25 lakhs. It's like near a range of 10 lakhs, 10 million to 25 million. That means 10% of salary would be counted. And when the accommodation is not owned by employer, it means actual rent paid by employer of 15% of salary. The rules are same. But when we talk about the own accommodation by employer, the rate of the salary, it's different in all the 3 categories depending upon the number of population. That is 7.5, 10%, and 15%. Right? So this is a question which has been read as rent-free unfurnished accommodation, that is government employee. See, it is means it is the first part of the question. Central and government license fees fixed by the government. So let's do Sri Raghavan, an officer of the government of Tamil Nadu, draws a 10,000 per month as basic salary. The government has provided him a rent-free, unfurnished house. So when we talk about unfurnished, this we're talking about valuation of unfurnished accommodation. So when we talk about the valuation of furnished accommodation, whatever the value of furnished accommodation at 10% of whatever the cost of furnishing of that accommodation, right? So Sri Raghavan, an officer of the government of Tamil Nadu, draws 10,000 per month as basic salary. The government has provided him a rent-free, unfurnished house whose market rent is 2,000 per month. Through, as per the government rule, license fees of the house is 500 rupees per month. Determine the value of the perquisites in respect of the rent-free house. Since Raghavan is a government employee, so the value, it's written here, everything. This is a solution. We have to calculate the value of perquisites. So Raghavan is a government employee. It's written as an officer of the government of Tamil Nadu. So when we government employee, so what when the person is government employee, central government employee, license fees fixed by the government. So license fees already given by the government. It's 500 per month. So 500 into 12, 6,000 is the value of rent-free house as per the government rule. So whatever the market value has been given, it's ignored. So whatever the rule says, you have to follow up that rules. Right? So always remember there is various varieties of the question, and even these question, the language is mention. It's, you can say, complicate language is also given, but the meaning is remains the same. So you need to understand that complicate language which is given in the most in the questions when you gone through these slides. This is also another question given to you. It's Venugopal is an employee of AP government, so it automatically shows the government employee. License fees is already given to you, 2200 per annum. So 2200 is the value of unfurnished flat. So when we talk about other things, we have to calculate accordingly if any particular condition has been put on. So license fees is already given. So accordingly, you have to, its fair market rent is not less than 15,000 per annum. Some the household appliances provided to Venugopal are owned by the employer. Cost price is 40,000. Written down value is 5,000. Employer pays 20,000 in higher charges for those. I already told you when we talk about unfurnished, and you need to calculate the furnished also valuation. Furnished, you can say accommodation. So here in this second part, here we're talking about the furnished, that what are the cost of furnishing has been given to you, how much the employer has been paid for the cost of furnishing or installing, that is the ACs in the previous years. So accordingly, as per the rule is given to you, valuation of the furnished accommodation and add 10% of cost of furnishing. So these are the rules has been described. So written, see, valuation of furniture, that is 10% of household furniture owned by employer, that is what is the valuation, cost price, that is 40,000, and you have to take up the 10% of the cost price. This is the cost of furnishing amount, that is 4,000. And the whatever the higher charges has been included, that also been added in that, because that is also the included in the cost of furnishing, because the higher charges to install the ACs during the previous years, so that is 20,000. So 24,000, that is you need to add the value of that the license fees. So when we add the license fees 2200 and the value of the accommodation plus cost of furnishing, that is 10%, so the overall value of perquisite's value of rent free furnished flat is 26,200 amount. So depreciation, obviously, it's always been on the. You have already gone through the financial accounting. So when it comes to the financial accounting, so depreciation is always a depreciate or a decreased value of an asset is being charged, and on every year the same original cost need to be follow up in every year. So in as per the rules on depreciation, the depreciation should always be on the original cost of the furniture and the other household flat cost. So this is all about in this. These are the all the important topics which has been taught today. So these are various varieties of the questions which is already given here. See, perquisites. Now this is also another, the same repetitive answers has been put up here. This is also the another question, rent-free unfurnished accommodation government employee. This is a question, market value, what is the license fees, right? This is also another method which is being estimated. This is the question given to you. So this is not a part of your course, so it's better we should avoid this. So whatever the topics which has been included in today's session, there are important topics and which has been completed in today's session. So if you have any doubts related to any of the topics, just let me know. So if you have any queries or any doubts or any problems that arise during the practical portions, that how the amount has been calculated after reading up the notes and the solutions of the various questions, just let me know on WhatsApp so I can clarify that particular doubt. So now the session is ended by my end. So if you have any questions or anything you'd like to ask with respect of your this chapter, that is income from salary, just let me know, because in the next session we are going to learn the income from house property. In that particular chapter there are the rules, but that rules it's very simple and very easier to understand, so there is no much and much categories. So the basic formula, the basic rules, you can see the classification or the categories of the questions we will do in the upcoming session, that is the next session, or next that is we are going to learn the income from house property, and how to evaluate the exact value of house property in respect of the various conditions. Right, students?
No question, sir.
Right, sir. No question.
Okay, so I believe whatever I have taught today, in every topics or whatever the topics that I have taught today, I believe you are equally understood the practical aspect and the theory aspect, and and you have also learned it how to put up your rules into the questions, and accordingly you will estimate the values, right? So whatever you can see in the slides, the various parts also which has not been included in your syllabus will be deleted, and accordingly we share you the PDF on the group. All right, any other questions you would like to ask?
Sir, you said that you share some notes on your
Okay.
course in the group.
All right. So whatever I have taught you, along with the practical, these are the rules. So theoretical or theory part of the chapters will be shared shortly on the group.
All right, sir. Thank you.
All right. Then I believe we wind up the session. All right, we
Yes,
wind
sir.
up the session of today, and in the upcoming session, we will learn the new chapter, a new unit, that is the how income from house property. Right? Take care. All
All
the
right, sir.
best. Have a great weekend. Okay. Bye.
Thank you, sir. You as well. We are just the two of us in class. Ibrahim.
Yeah. Elita,
Yes, we are just the two of us.
you say what?
Saying we are just the two of us in class.
I cannot hear you, Anita.
We are just the two of us in class.
I did not get what are you saying. Please, can you write it?
I'm saying we are just the two of us in class.
Okay. Which time?
No, the class
Okay.
is over. Bye.
I know.
Just the two of us.
Uh,
That's what I mean.
yeah, yeah. Hold on.
Everyone has
Hey,
gone.
please, Alita, let me ask you one question.
Oh, yes.
Have you written that link that Taron gave his email address? Have
Yes,
you
I
gotten
have
it?
it. Yes, I have.
Okay. Okay.
But
Have you sent him an email? Have you emailed him?
no, like he was added in one of the WhatsApp group Kelechi created.
Okay, I get that link. I get
Yeah,
that WhatsApp
check
group. I got
check
it.
one of the WhatsApp groups, you'll see.
Okay, okay. Don't worry. I will check.
All right, bye bye.
All right. Bye bye. Thank you. Thank you, Alita. Wishing
You're
you the best.
welcome.
Okay. You too.